We have Phil, who's in Surrey, BC. Hi, Phil.
Good afternoon, Mark. Thanks for taking my call. David, you look very dapper this afternoon. Question on CCL. Thanks to Andrew McCreath, I got onto this stock early in the year, and it's had a terrific run. Probably one of the best performers on the TSX. Question is, it's hitting around 26, I think, forward PE, and despite the trend, as my friend, is it getting fully valued? I'd like to add some more, but I'm a little bit concerned that it might start to roll over a bit.
Okay.
I'll hang up and listen
All right.
to your
Thanks for calling, Phil.
Thanks.
Thanks, Phil. So on CCL, anything related to the consumer in Canada is performing well. Because, of course, it's a small sector within our market, and we have big parts of our market that are sort of broken. And so, not to take anything away from CCL, we own the stock. And it is a stellar performer and has been for a long time. It is in a group that in Canada is more expensive than the stocks in the US. So there's lots of great consumer names to take a look at. I like the idea of owning, US dollars. CCL, of course, has a lot of US business. Mm-hmm. So I'm happy to own the stock. It's not inexpensive. There are other consumer names that you could take a look at. But I'm not concerned that it's getting too expensive here because realistically, there's a lot of money that needs to be invested, and people are sort of hiding a little bit from energy, and they're hiding from materials, and they're hiding now to some degree from the Canadian financials.
Is this stock underappreciated?
I think it's not well known.
Mm-hmm.
I think it's not well known. There's a lot of mid-cap stocks that have become very large-cap stocks in the last couple of years because they're in the right sectors. But I think back to the 90s, and we had healthcare did really well in Canada too, but they were in Me Too names, like biotech stocks that were not quite the same quality as some of the biotech in the US. And when they roll over, those companies got hurt a little worse. I think CCL's a high-quality company, really well managed. They've got a really great growth path, and I would own the stock. I'd continue to buy it, but I think that there's other names in the sector that you can also take a look at.
And it's trading at a record high today. Thanks, Phil. Anne's in Burlington, Ontario. Hi there, Anne.
My call. CGI, it's dropped a bit, and I'm wondering, do you own it? Would you buy it? Is it in the right sector? Thank you. Bye.
So first of all, technology services are a great theme in this market. We are thematic investors. We get very focused in a few key themes. And CGI has done a great job in growing their business in the US. It's pulled back a little bit recently. I'm actually going to talk about a IT services company today as one of our top picks that you might consider. But I have no problem with CGI. It's had a natural pullback here, and it is in the right group. If you want to be in Canada, it's a good name to focus in.
Next up, a tweet from @PhilAnd97. Can you ask Mr. Burrows for his thoughts on Facebook?
Okay, so Facebook is a large holding of ours. We're known as a firm to be fairly conservative in our strategies, but not afraid to go to what's working. And this group is working really well. Facebook has a tremendous opportunity to leverage the platform that it has. It's doing a great job in mobile advertising. The video portion of its business is growing dramatically as we go along. When Disney talked about some of the challenges it's facing in its broadcasting business, on the other side, Facebook and Netflix are the winners in this area. So I'd buy the stock here. It hit a high of close to 100. It's pulled back and consolidated. It's 5-6% below the highs. Not technically broken at all, and they continue to execute and do a great job. So I think that this is one that you have to pick where your stop would be, and you have to be ready for a little bit of volatility, but I think that they really have some very natural tailwinds.
You mentioned Netflix. Are you in that for clients?
We're a shareholder in Netflix also.
Okay, and what about Google and Apple?
We own Google. Apple is a smaller stake than it was for us historically, but it's still a large holding. We're in the kind of market where you have to own the right themes, and there are some companies that have very clear advantages. So it's not a market that has very good breadth. It's not as though everything's working. If you can target what's working and avoid the stuff that's not, it makes a big difference. And that's why a lot of managers this year who are stock pickers are having a very good year relative to the market, because you have to be in some of these companies.
There's Google, Apple, and Netflix over the past year, and Netflix the runaway winner, but the other one's doing quite well too. Now we'll come back. Speaking of targeting, David did that last September with 3 past picks here, and we have 2 big winners and one that's kind of flat. He'll talk about those after this.